Welcome back to Candlestick Signals for today's market, where we are rediving deep into the candlestick signals that are shaping the financial landscape on August 28, 2025. Buckle up, because we're about to uncover some fascinating patterns that could make or break your trading strategy. From record-breaking highs to potential reversals, today's market is a roller coaster of opportunities and risks. So let's jump right in and decode these crucial signals together. Our first stop is the S&P 500, which closed at a record high today. Riding on a wave of bullish sentiment ahead of major tech earnings releases, the index formed a 3 inside down pattern, a rare sight that's got traders buzzing. This formation, typically bearish in nature, is interestingly juxtaposed against the overall positive close, creating a fascinating tension in the market. The S&P 500 saw a 2.3% increase, translating to a market capitalization change of $845 billion. The day's high was reached at 2:45 p.m. Eastern Time, with a slight pullback in the final hour of trading. Moving over to the Nasdaq, we're seeing a different story unfold. The tech-heavy index displayed a bullish hammer candlestick, a powerful reversal signal that suggests the bulls are regaining control after a period of selling pressure. The Nasdaq surged by 3.1%, adding a whopping $1.2 trillion to its market cap. The bullish hammer formed decisively, the low of the day occurring at 10:30 a.m. before a strong rally into the close. In the world of finance, the Bank Nifty index is painting a picture of uncertainty with a doji candlestick formation. This pattern, characterized by a small real body with long upper and lower shadows, indicates indecision in the market. The Bank Nifty saw minimal movement, with a mere 0.2% change and a market cap shift of $3.5 billion. The doji formed after a day of choppy trading, the opening and closing prices nearly identical at 11 a.m. and 3:30 p.m. respectively. Let's zoom in on some sector-specific action, starting with technology. This sector has been the talk of the town, leading the rally with an impressive gain of 7.8% and a market capitalization change of $572 billion. Software and IT services sub-industries were the main contributors, each posting increases of around 8.2%. Meanwhile, hardware and storage weren't far behind, clocking in a weekly return of approximately 7.5%. A standout in the tech space is Nvidia, which formed a textbook bullish hammer. This pattern, coupled with a surge in trading volume, suggests that buyers stepped in aggressively at lower levels, potentially setting the stage for further upside. Nvidia's stock price jumped 9.3%, adding $85 billion to its market cap. The hammer's low was formed at 11:15 a.m., with a strong push higher throughout the afternoon. Tesla, another tech giant, mirrored this bullish sentiment with a Marubozu candlestick. This long-bodied candle with little to no shadows indicates strong buying pressure throughout the day. Tesla saw a 6.7% increase, equating to a $52 billion rise in market cap. The Marubozu formed steadily from the opening bell at 9:30 a.m. to the closing bell at 4 p.m., showcasing consistent buying interest. Shifting gears to the healthcare sector, we're seeing some intriguing developments, particularly in mid-cap stocks. CervoMed, a rising star in the biotech space, flashed a bullish Marubozu pattern paired with a KDJ Golden Cross. This powerful combination signals increased upward momentum and potential for further gains. CervoMed stock soared by 12.5%, adding $1.8 billion to its market cap. The bullish Marubozu formed between 10:45 a.m. and 3:15 p.m., indicating sustained buying pressure throughout most of the trading day. The basic materials sector showed moderate growth, with selected materials stock leaders like Newmont and Agnico Eagle Mines posting strong gains. The overall sector market cap moved positively within the week, reflecting ongoing demand in core commodities and industrial resources. The sector saw a 3.8% increase, translating to a market capitalization change of $28 billion. A bullish engulfing pattern formed on Wednesday, indicating a potential reversal of the previous downtrend. However, it's not all smooth sailing across the board. The financial sector and cryptocurrency markets are facing some headwinds, as evidenced by engulfing bearish patterns in doji structures. These formations highlight heightened volatility and potential profit-taking. The financial sector experienced a 1.5% decline, wiping out $45 billion in market cap. The engulfing bearish pattern formed between 1:30 p.m. and 2:45 p.m., suggesting a swift shift in sentiment during the afternoon session. In the crypto space, Bitcoin exhibited a doji candlestick, reflecting the uncertainty plaguing digital assets. Bitcoin's price fluctuated within a narrow range, ending the day with a marginal 0.3% decrease and a market cap reduction of $2.5 billion. The doji formed after a day of back-and-forth trading, with the opening and closing prices nearly identical at 12 p.m. and 11:59 p.m. UTC, respectively. From a technical perspective, we're seeing a mix of signals that paint a cautiously optimistic picture. The Relative Strength Index RSI is on the rise for major indices, suggesting growing momentum. The Moving Average Convergence Divergence MACD is flashing bullish signals in some indices, further supporting the positive bias. However, the presence of doji formations in certain areas of the market underscores the need for vigilance. When we look at the broader market sentiment, it's clear that we're in a selectively bullish environment. Growth sectors, particularly those driven by innovation and technology, are showing strength. However, this optimism is balanced by risk-off signals in financials and speculative assets. This dichotomy suggests that a tactical approach, utilizing candlestick signals for entry and exit timing, could be particularly effective in the current market conditions. Let's break down the major candlestick formations by industry capitalization. In the large cap space, the S&P 500 and Nasdaq are leading the charge with their 3 inside down and bullish hammer signals, respectively. These patterns are favoring a neutral to bullish bias in dominant sectors. Mid-cap stocks, particularly in biotech and healthcare, are highlighted by Bullish Marubozu formations, reflecting possible trend reversals and opportunities for growth. Small and speculative cap segments, including certain financials and crypto industries, are exhibiting bearish engulfing and doji patterns, underscoring the risk and indecision in these areas. As we wrap up today's analysis, it's clear that the market is presenting a complex tapestry of opportunities and challenges. The selectively bullish environment favors growth and innovation-led industries, while urging caution in financials and speculative markets. Traders and investors would do well to pay close attention to these candlestick signals, using them to inform their strategies and improve market timing. Remember, in the world of trading, knowledge is power. By understanding and interpreting these candlestick patterns, you're equipping yourself with valuable insights that can help you navigate the ever-changing market landscape. Whether you're a seasoned trader or just starting out, these signals provide a crucial edge in decision-making. As we look ahead, keep an eye on how these patterns evolve. Will the bullish momentum in tech and healthcare continue? Can the financial sector shake off its current bearish signals? And what surprises might the crypto market have in store? Only time will tell. But armed with this candlestick analysis, you're better prepared to face whatever the market throws your way. Stay tuned for our next market update, where we'll continue to unravel the mysteries of the financial markets, one candlestick at a time. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.